Today, the United Kingdom is still one of the most developed economies in the world. It is also known as one of the first nations to begin the process of global modernization and to become a symbol of the industrial age. That is why watching the country face its current economic problems feels even harder. The decline of Britain's influence, together with its political, social, and financial troubles, was not something unavoidable. When the economy is growing, the national currency stays strong, investors trust the market, and loans become cheap. Under such conditions, a nation can plan for the future and build long-term strategies. But when the economy slows down, the nation currency loses value, credit becomes expensive, and businesses stop taking risks. In such times, politics is often ruled by people who make big promises but have no real plan how to fix the crisis. The current state of Britain is clear. Its former global power has weakened, and its economy now depends on only a few industries that give little benefit to ordinary citizens. The country that once led the Industrial Revolution and created an age of prosperity is now facing poverty and deep social divides. The paradox is that many people no longer notice or care. The real condition of the British economy can be misunderstood because it has turned into what some call a two-speed economy. London keeps growing while many provincial regions are falling behind. At first glance, everything may look balanced, but living standards of most people are slowly decreasing. If politicians do not feel the pressure to act, nothing will improve. This situation benefits those who work in London's highest paid sectors but leaves the rest of the country behind. This is a perfect example of how modern economic success is built in the 21st century, but why, after centuries of advantage, is the United Kingdom starting to lose ground? Has London's growth come at the cost of the rest of the nation? And the most importantly, can this path still be changed when the crisis seems deeply rooted? The biggest challenge for Britain today is the loss of trust. Trust is one of the key elements that define a country's economic health. It is the foundation of financial stability. When trust disappears, a nation loses not only investment, but also its sense of direction. Losing trust can damage even the strongest economies. In Britain's case, this slow decline began after the end of its imperial era, when the country still had enormous global influence. But the modern problems became obvious after the specific event, the so-called Black Wednesday, on the 16th of September 1992. That day became a point of no return for Britain's financial system. Before that, the country had faced some difficulties, but was still seen as one of the most stable places for the trade and investment. The British pound was the second most used currency in the world and was trusted worldwide. Although that reputation is fading now, for decades the pound was a symbol of stability. At that time, the United Kingdom joined a European monetary project meant to fix exchange rates among the main European currencies. The idea was that central banks would intervene if any currency moved too far up or down. On paper, this looked like a good way to reduce risks and make international trade easier. However, after long debates, Britain joined the project in 1990, at the worst possible moment. The world was going through the big geopolitical changes, the collapse of the Soviet Union and the reunification of Germany. East Germany was much poorer than West, so Germany had to rebuild the East quickly, modernize its infrastructure, and raise living standards. To attract foreign capital, the German government raised interest rates. Money started to flow into Germany, while Britain, with its much lower rates, was left behind. Investors began selling pounds and buying German marks. To defend its currency, the Bank of England started using its reserves, selling foreign currencies and buying pounds to keep its value high. But that could not last long. Economic growth in Britain was weak and confidence was falling fast. When capital continued to leave the country, the Bank of England suddenly raised rates from 10 to 15% in just a few hours. It was a desperate attempt to show strength, but it was already too late. Investors had lost faith. Speculators began to bet against the pound, expecting that the government would eventually quit the exchange rate system, and that is exactly what happened. After several failed attempts to defend the currency, the government announced its withdrawal. That day became known as Black Wednesday when the pound collapsed and Britain suffered huge financial and reputational losses. Although some of the damage was later repaired, the long-term consequences were serious. For the first time in decades, people began to question whether the British economy was truly stable. Later, the 2008 global financial crisis hit the United Kingdom especially hard. Then came the European debt crisis, followed by deep divisions caused by Brexit. One prime minister after another tried to lead the country through uncertainty, but public confidence in government and economic policy kept falling. Today, the main pillar of the economy is the financial industry concentrated in London. However, this extreme concentration has created a dangerous imbalance. The massive profits of the financial sector do not help most of the population. Unlike in New York, where financial capital supports local businesses, London has already turned into a hub for global shadow money. Much of this wealth is of under origin and brings little benefit to the real British economy. London remains the world's second largest financial center, but the gap between it and the rest of the country continues to grow. Because the pound is still overvalued, British manufacturers struggle to compete with companies in the EU, especially after Brexit, which made trade even more difficult. Traditional industries are shrinking, education standards are declining, and investments in technology and innovation stay slow. As a result, labor productivity falls, global competitiveness weakens, and ordinary workers earn less. Many Britons can now find better jobs abroad in the United States, Canada, Australia, or in Asian cities such as Hong Kong or Singapore. So Britain faces a paradox. It is both a destination for migrants from poorer countries and a source of immigration for its own skilled professionals.